Hi, 60 lakhs might sound like a lot of money today, but within a couple of decades, 60 lakhs will be equals to today's 25 lakhs. Maybe you can buy a mid-level sedan car, maybe try to pay a down payment for a house, etc. A laptop might cost 3 lakhs, a scooty might cost 2.5 lakhs, etc. I will show you the calculation shortly. So this investment is not just a good to know thing, but a mandatory one. It will be the greatest gift to your girl child. So buckle up, sit tight, and watch the video till the end. So the name of the scheme is Sukanya Samriddhi Yojana. Okay, so it's a famous scheme already. Okay, if in case you didn't know about that, no problem. I'll be talking all the details in this video. Okay, the Sukanya Samriddhi Yojana is a government savings scheme created with the intention of to benefit the girl children under the initiative called Beti Bachao, Beti Padhao. So everybody has heard about that, right? So the parent or the legal guardian of the girl child can open an account, and the girl child should be younger than 10 years old. So that means for children above 10 years of age, you can't open an account in this scheme. Understood, right? So this scheme carries a higher interest rate along with several tax benefits. Let's understand how to open an account under SSY. The account can be opened by the guardian to the girl child or one of the parents. Like already mentioned, the girl child should be younger than 10 years old. Okay, so there can be just one account per girl child and a maximum of 2 accounts from a single family. Just one exception here to remember: if in case the girl children are twins or triplets, you can create more than 2 accounts in a family. Okay, that is an exception. And with that, let's understand how to open an SSY account. You can open an SSY account either going to the nearest post office, talk to the folks at the post office, or download the form from one of the participating banks. And who are these banks as of May 2024? State Bank of India, Punjab and Sindh Bank, Bank of Baroda, Canara Bank, Bank of India, Bank of Maharashtra, Central Bank of India, Indian Overseas Bank, Indian Bank, UCO Bank, Punjab National Bank, Union Bank of India, IDBI Bank, Axis Bank, and ICICI Bank. Okay, so you open an account with a minimum of 250 rupees in a financial year, and the maximum investment allowed is 1,50,000. Once an account is opened, you have to keep the account active by at least investing a minimum of 250 rupees every year, or else the account would be considered as a default account. Okay, so let's understand the tenuity and the maturity of the scheme. From the year of account opening, the account has to be kept active for 15 years straight. If in case you default in a couple of years, you don't pay, you reactivate the account by paying 250 rupees plus 50 rupees for each defaulted year. Okay, the SSY account matures in 21 years, post which you'll be able to withdraw the amount. So like I discussed, if in case you default, you pay 250 rupees plus 50 rupees to reactivate a defaulted account. Okay, remember, this is possible. Reactivation of the account is possible only during the first 15 years. After 15 years, you can't reactivate a defaulted account. Okay, however, you can also withdraw the money once the child gets through class 10 or attains the age of 18. Okay, so in these cases, you can at max withdraw 50% of the amount that was in your account in the past financial year. Also, you can do this withdrawal transaction just once in a financial year, either as a lump sum or in installments. Okay, so let's see what does the post office say about premature closing. Account can be prematurely closed from 5 years of its creation under some extreme compassion grounds. If in case the account holder has been diagnosed with any life-threatening disease or medical condition. For this, you might have to submit any medical documents, but this is one of the conditions for which the account can be prematurely closed. And God forbid, but in case of death of either of the account holder or the guardian. Okay, I hope and pray nothing like that happens, and wish everyone the best of health and happiness. It's a good to know clause that premature closure conditions. Coming to the maturity period, after 21 years of account opening, or for marriage expenses of the girl child, provided the girl is above 18 years of age. These deposits you make qualify for deduction under 80C of Income Tax Act. We have a lot of other videos on tax planning and filing. Please do watch the other videos and subscribe to our channel and get the latest updates. Okay, so with respect to the marriage expenses, a couple of points to note. Account can be closed only during the 30 days before the wedding or 90 days post wedding. Any closure outside this window is not entertained. So We have covered the most important points of the scheme. If you can plan and invest the required amount every year, your child will have a corpus of 65 plus lakhs at the right time. Hope this video helped. Thanks for watching. Jai Hind.